Hi everyone, this is Rob Roy and welcome to the Elliott Options U.S. Market Update. As we do each and every week, the stocks that you see on your screen will be the stocks featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. As you can see from the background, back in the Dragon Capsule, feel like I'm being followed around by hurricanes. Go up to the Appalachians to get away from this, and they come up there. Go up there, and then they come back down here. So I hit both of the homesteads here within the last week. So feeling a little bit beat around here. I need to do a Chuck Norris sidekick with this weather stuff going on. Let's take a look at the chart. In last week's recording, we posed the question of whether or not we could be setting up for an ending diagonal on the S&P. And I did make the comment that if you're an Elliott Wave purist, you could probably pick this chart apart and say that it's not really exactly to the rules, but it's getting better. So let's look at it again. You can see all the zigzags that are included in an ending diagonal. So they're forming. We're moving to the upside in this last diagonal, but it's not the last one, as I'm going to show you. It's actually a complex. But I did want you to note where the question mark is, because that's where the 100% extension is in this zigzag, which is where you would expect it to go. Now I'm going to take all this stuff off because there's too many lines on the chart and put one more on here. So where you can see that the last zigzag does have a complex wave in it. So as we remove all this stuff, go ahead and just leave this last one, put this one on. And as we move from here, you can see that as we create this right around in the neighborhood of a 30% correction, that gives you a 61.8% extension. Look where that is. Exactly where that question mark is on the 100% extension on the larger zigzag. So the complex C wave and the larger zigzag are giving you the exact same target price. And I like the symmetry of the pattern. And I know not everybody is a big proponent of that or cares that much about it, but I do like it when the technical patterns have symmetry to them. It coincides right at the beginning of November, right around the election. Are we going to have a buy the rumor, sell the news on the market itself once the election is over? Well, it appears to be as we move to the upside today. Let's take a look at the chart of the VIX. I had made a comment on the VIX that we were looking on the VIX as far as having a new support level. That's 20. We had broken back down into this range. I had been saying between 12.5 and 17.5, but it really wasn't. That's where this line is. It's really been 15 has been the support level on the VIX with 20. So the range, instead of being 12.5 and 17.5 like it was into mid-July, we've now moved to between 15 and 20. But we're trying to set a support level at 20. We've been testing it all week. And if we bounce from here, you can figure out what may happen. So I do think that kind of ties in with a little bit of that buy the rumor, sell the news. In other words, a bit of a correction once the election is over. It's counterintuitive, which is why I kind of like the idea. The market tends to do the opposite of what you think. We've been talking so much about how the market hates indecision, and we have a lot of indecision going into this election. Then when the election's over, you think, okay, now we know what party's going to be in control. So that part of the indecision is over. Now we can rally. Well, that would make sense. So maybe the market's saying, let's rally first. And then when we get to the point where we have the decisiveness, we know what party is going to be in control, then we correct. So I just think all that makes sense. So kind of throwing that out there. Now let's take a look at the bond market. Gosh, the bond market has been flashing warning signs. It hasn't been acting the way you would think. And as we bring up the chart of the TNX, we did have some economic news this week, starting with the CPI report that came out yesterday, a little bit hotter than expected. So the CPI report comes out and says, 1/10 higher on the headline number and on the core CPI. And I'm going to show you the chart in a minute that we created a doji on the S&P where there was some indecision on the market saying, oh, we weren't really expecting that. What does that mean? And then today we come in with the PPI report, and that was a little tamer than expected. And I learned a couple new terms this week. If you can go back and bring up that CPI report Again, this is going to go into the two new economic terms, apparently, that came out, starting off with recalibrate. That Chairman Powell used no less than 8 times in his speech when he did the 50 basis point rate cut. So I got it. I understand recalibrate, Chairman Powell. Well, now we got a new one on the CPI report that came out yesterday, janky. So I don't know what that has to do with the economy, but whatever. So the CPI report, janky. Anyway, just having a little fun here on a Friday afternoon. So let's go back and take a look at that chart of the TNX. And you can see that the rates have been moving to the upside. Remember, the TNX is rates. I'll show you the TLT, which is prices in the bond market. But if the Fed is moving into a rate cutting cycle, why in the world are rates moving up like this? What are they trying to tell us? Were rates trying to tell us? Was the bond market trying to say, hey, yeah, we still have a little concern about inflation out there. Maybe this cutting of rates and aggressively cutting is not the best way to go. I think that's something that we have to consider. We do have a pretty good wave 5 formation to the downside here. At least the wave 4 is up here in the 50% area. The software has colored it purple. Remember, this is an Elliott wave algorithm within this software. If you haven't gotten a copy of this software, go to hub.com, hubb.com, get a copy of it. You get live Elliott wave charts. So if you like to trade intraday, everything I talked to you about on these weekends can be utilized intraday during the market hours with Elliott wave rules, etc. But when this turns purple, the algorithm thinks that may be the end of where that wave is. If it stays green, it means the algorithm thinks that wave could still be underway. So perhaps that's the end of the bounce in rates. Maybe things are going to calm down a little bit. Let's go over to TLT, which is a little longer in on the curve. That's the 20-year, and this is pricing. So it makes sense, right? The TNX is showing rates going up. TLT is showing prices going down. That's the way the bond market works. Inversely, prices go up, yields and rates go down. And you can see here, we also have a pretty good stopping point here on the wave 4 on the TLT, right at the 61.8% fib level, my favorite fall fib level. So on the TNX, we bounced up to 50%, which we could correct and head down in the wave 5. And on the TLT, we could hold at the 61.8% level and bounce up in prices. Those two would jive. Maybe the bond market calms down a little bit, but it's certainly been acting a bit odd and not in conjunction with what you would expect the bond market to be doing if the Fed is indeed moving into a rate cutting cycle. And perhaps the bond market is a bit cautious of that. I think we should heed that warning. Let's take a look at the dollar with rates going up. The dollar did find some support. I mentioned that we were kind of hanging on to this 161.8% extension, like my analogy of hanging on a cliff with your fingernails. But we did bounce up, and we have a pretty well-formed wave 5 in the dollar as well, right at the 50% bounce level, and that's also colored purple, so a solid color, meaning that perhaps that's the end of the bounce in the dollar. I don't want to lose the dollar. As I've talked about before, I was concerned when we were looking like we might break below this 161.8% extension. So far, so good. We need the dollar to stay strong, and that bounce in rates has been enough, apparently, to at least keep the dollar in the global minds. We want the dollar to stay as the bastion of last resort, the currency of last resort, if you will. And so now let's move in and talk about some of the other equities markets. Going to the DIA, we look at the Dow. Nice update today in the Dow, and it kind of coincided with the S&P. I'm going to switch back over there because I told you I'd show you that. So there was the doji that appeared on the chart right there yesterday when the CPI report came out, where it was like, oh, yeah, we weren't kind of expecting that. And then, but the PPI report comes out, all's good. It was tamer than expected, so we have a market rally. So that was also furthered by what occurred in the DIA. Didn't quite have the doji yesterday, but a nice rally in the DIA. Now we're starting to get up into this area in the midpoint here. We had a area of TradeFinder. We had the DIA as one of our alerts on TradeFinder. And if you haven't visited TradeFinder, if you haven't come to watch us, please do so. You can use the link on your screen to sign up. It's free. We do it every Tuesday at 1 p.m. Eastern Time during market hours. We look at the market, we look for trade ideas, and we have a live Q&A at the end, and it's an awesome Q&A. It's a great community. Love to have you join. And one of those case study considerations that came out of recent TradeFinder was going long the DIA. And so now we're right at the midpoint of this wave 5. Let me put the moving averages on here. Not that much overbought, a little bit on the close, but not too far from the 10-day moving average. As you know, you've heard me say this 1,000 times. You've been watching. No security in any time frame is too far away from the 10-day moving average. That's one of my hard, fast rules. A lot of people that have visited with us and looked at the videos and stuff over the years saying that was one nugget that they've taken with them, regardless of what their trading system is. Use something other than Elliott wave. That's still something that you want to put in your trading toolbox. Let's look at the Qs. And we talked about this zigzag pattern to the upside. I still am kind of blown away that we are fighting this trend of rates moving to the upside and having this breakout out of this triangle. We have a complex C wave in this zigzag. We needed to get above that A wave impulse move in order for the C wave to play out, obviously. And it wasn't sure what it was going to do. So we formed a triangle here. So it was a corrective triangle, Elliott wave corrective triangle. They always break out, and it being right at the A wave high made an awful lot of sense. So we have a complex C wave here. We're breaking to the upside. I think you have to respect the chance for that C wave to come to fruition, especially if the bond market's going to calm down and go the other way. If we've been able to break out of this triangle to the upside, wow, rates have been going up. What do you think can happen if rates do calm down, like the charts of the TNX and TLT look? Looking at the IWM, let's see where risk really is. I do believe, as some do, that the small caps are a good signal of risk on, risk off in the market. And there's that triangle that we talked about, and we're breaking to the upside. We actually talked about this during TradeFinder as well this past Tuesday, this triangle that was forming on the IWM. One day means nothing. There's another one of my hard, fast rules. You have to have a second day, a follow through, or confirmation day, because the market loves to give head fakes. So if you bite into the head fake, sometimes you can get burned on a whipsaw. So you want that second day, the follow through, or confirmation day. So today doesn't really mean anything, although it looks like it did. But we'll be looking to see on Monday if we can follow through to the breaks, upward breakout on the IWM. Now let's look at some other securities. We'll look at, well, we argue whether the cryptos are securities or not. That's the big fight out there in the market, isn't it? But if we look, you can see that nice day today in Bitcoin, fighting this 60,000 level. This has just been playing out exactly as we've been talking about. 60,000 is the midpoint. We found some support down here at 55. We've come up and tested 65 a couple times. We tried to get there and hold it there in the beginning of October. End of September, we broke down back, but we held 60,000, the midpoint of that trading range between 55 and 65,000. Nice bounce to the upside. Good day in Bitcoin. We look at Ethereum, and you know the drill here. We got to get back above 2,500, and it just really is struggling to do it. But if Ethereum can get above 2,500, perhaps we can have something moving to the upside. But it's fighting that level. And we're still right at the point of this triangle. And you could almost make a good argument of, well, really all this is a wider triangle. And I wouldn't argue with you if that was your point of view here at all. Some of you kind of pick on me for how I draw the lines. I'm not trying to be the pickiest guy on drawing triangles. I'm just looking to see if there's consolidation. Is it a general triangle pattern? I don't really care if I get my lines exactly where they need to be. Just looking for the overall picture. And I look at Elliott wave, et cetera, from a trader standpoint. That's why I was saying if you're a pure Elliottician, you might pick apart that ending diagonal. You'd have a harder time doing it now since it's getting so much better. But I look at it from a trader standpoint. I take all this information. How can it make me a better trader? And that's the way I use these tools. And that's what I'd like to share with you. Don't get so caught up in the minutia that you miss the bigger picture. The whole old adage of paralysis through analysis can really get you in the world of trading. Let's look at GLD. You can see that it looked like we were going to sneak out to the downside of this triangle. There's one of those head fakes that I talked about. So we break down. No follow through day. So we broke to the downside. We didn't get the follow through. We had a doji. It was like, not so sure. And right back to the upside. So it looks like that's a false breakout to the downside. And we're moving back to the upside there on GLD, SLV in catch up mode, as we've been talking about. And a lot of you have commented about, yes, silver can play catch up. And so far, it looks like that's exactly what's going on. Liking SLV a lot here with this zigzag pattern that's set up following the breakout of this triangle. So corrective patterns everywhere here. And if you really are an Elliott wave purist and you've read what Elliott wrote, you know that Elliott himself was a bigger believer in corrective patterns, flat zigzags and triangles, than he was in the 5-wave impulse, which is what gets all the publicity. When you go to look up Elliott wave on the internet, you always see that 5-wave pattern. Well, if you really read his works, he would say, let's break it down and focus on the corrective patterns. That's where the action is. That's why I like to look at these zigzag patterns, specifically in a wave 3, the strongest wave. And that's what's going on in SLV. So I really like the chart here. It does look like SLV is trying to play catch up, and I would not be surprised to see SLV move up and hit that 31 level. Looking pretty interesting at this moment. So let's take a look at UNG on natural gas. And boy, just when we thought maybe something was going on, it looks like this is just a plain old 5-wave Elliott wave pattern playing out here, where we had the wave 4, bounced up, got almost to the 50%. Now we're breaking down, and we didn't get a follow through day today. We needed to have a lower a close lower than the low bar from yesterday, but it looks like maybe we're trying to sneak down towards this wave 5. Let's see if we can find a way to get back above 15. But now we're below the 10, 30, and 50-day moving average, as well as support at 15. UNG has some work to do at the beginning of the week to get back above here to disqualify this 5-wave pattern, or you have to put a lot of faith in the fact that that's a likelihood to occur. If we take a look at USO, we'll take a look at what's going on with oil. Of course, we had the storms in the Gulf, et cetera, and that was affecting the price of oil. So we had this move to the upside. We got too vertical, didn't want to chase that. We talked about this in depth in TradeFinder on Tuesday. I was talking about how it was just too vertical for me. Well, we came right back down. There's a little area of support that I drew that on Tuesday. So there's that line from Tuesday. We held it, and now we're right back to the point of the triangle. Again, classic Elliott wave corrective triangle rules. And now it's a point of, we kind of said this before, we have to get a Missouri take here on USO. Show me where we're going to go. Well, we did what was supposed to happen. So we broke to the downside out of this symmetrical triangle, and that's the Elliott wave corrective rules. You go back and test the point of the breakout. That's what we've done. Now what? Well, now we have to let oil tell us what the next impulsive move may be. All right, let's move to some stocks of interest, starting with Nvidia. And by the way, as a quick reminder, every single month this year, we're giving away one of our level 3 subscriptions absolutely for free. All you have to do to register for it is post a comment underneath this video. Post a comment and you're registered. And it includes our time strategy, which is an income-based strategy. It looks for sideways moves following a big drop in the stock. So we take advantage of both time decay and a volatility crush. That's where the income comes from. Volatility strategy, which is the exact opposite, where we're taking advantage of the breakout of the triangle. We've shown you that. We're about to show you it again here on NVIDIA. And then our AI-based impulse strategy, which focuses highly on those zigzags I've been talking about within wave 3s. So all three of those together, you can go to our website at ewotrader.com and see the value is thousands of dollars, and we're giving away one free every month this year. So just post a comment, say anything you want, and we will put you in the drawing. That's all you need to do to register. So good luck to everybody. All right, now let's take a look at the chart of NVIDIA. Breaking to the upside here. Again, a little bit of a surprise to me with rates going up, but piggybacks off what's going on with the Qs. So that's a pretty large symmetrical triangle that we have here in NVIDIA. We're getting past the point, or getting awfully close to being past the point where this could be a false breakout. It's still possible. We need to take out this high here on the mouth of the triangle. That's what you look for. How wide was the mouth of the triangle? And when you're looking to see where is the risk area for a false breakout, is in when you get to the top part of the mouth of the triangle. So we're getting awfully close there. Still could happen. We still could roll over, but for now, it does look like this is an upside breakout out of NVIDIA. And then MSTR. I got asked this question last night in an insiders meeting, which is for our alert subscribers at evotrader.com. Is MicroStrategy a good, and I think it was asked actually in TradeFinder as well. So people starting to take note, and if you're familiar with Mr. Saylor there at MicroStrategy, he's basically bet the farm on Bitcoin. It's more of a Bitcoin company now than anything else. And with Bitcoin having a good day, MicroStrategy had a fantastic day today. Big break to the upside. So we had this large symmetrical triangle in MicroStrategy. There's that false breakout that I was talking about. Here's a perfect example of it. Look, we broke to the downside, and then we turned and we went back. So this was a false breakout. The big move was actually an upside breakout. Now we are a little bit overbought here from the 10-day moving average with where we are at this wave 3 high. So at that point in time, perhaps maybe we want to pause a little bit, taking advantage of that move in Bitcoin. Now, you guys had asked about some energy stocks, and just in an effort to save as much time as possible with the specific stocks, I'm going with the ETFs in this week's recording. So here's the XLE, the energy ETF. We got to a little bit overbought, so there's that rule of getting too far away from the 10-day moving average and then bouncing back off of it. It looks like energy wants to go higher. And one of the reasons is when you take a look at that, here's a little more Elliott wave chatter here for you. That wave 4 being 82% means that Elliott wave pattern is disqualified. So you take that off. And what normally happens when you have an Elliott wave pattern that disqualifies, you retrace the prior pattern. So if I turn it back on and put the Elliott wave back on, you can see that we should go up here and retrace all that move. So we should see the XLE up in this area around 97.5. So a little bit higher to the upside. It doesn't look like we're done on the XLE, at least if that follows that Elliott wave rule when you have a pattern that becomes disqualified. Then we have the XLF. You've been asking about financials. Again, kind of surprising with what's going on with the bond market. You would think rates moving lower would give this a propulsion to the upside, but here's the upside breakout of this triangle. We're getting a little long in the tooth there on the wave 5 with the extension up to 212%. But look at these triangles. So there's the ascending triangle, boom, broke out, consolidated immediately into a symmetrical triangle, and we're breaking out again, once again on the high of the day, a little bit overbought. So maybe we have a little bit of quiet to start the week next week as some of these calm down. But maybe we're getting in front of the fact that the bond market is going to calm down. Rates are going to come back down, and that is going to put a bid under the financials. They had a bid today, even without any sort of a big downward move in rates. And then we'll finish things off with the INDA, which has been so interesting for the past year or so. We were really trying to hold that 50-day moving average. We broke below it and then turned and came right back up to it. So at this point in time, we're testing that 50-day moving average. If we can't get back above that and the 10-day moving average, and I would submit that we need to get above 58 if you want to consider going long again, the INDA. If you're still long, perhaps you hold on, see what happens with this 50 and 10-day moving average area here. If you're looking to get in, I would wait and see if we get above 58. If we can break back above 58, then perhaps we're going to be off and running again on the INDA. But for now, it looks like there's too much danger here of perhaps falling all the way down to 55 on the INDA. So I think you're in wait and see mode there. So thanks as always for your time. Have a great rest of your weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.